What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little bit of analysis on the Ortex short interest and utilization data going into next week's trading week with a specific emphasis on cost to borrow. Now, that's going to come into effect a little bit later, but what we also have to take a brief note on is a little bit of what we see going into next week with the options chain. Now, the two main pieces that we're going to be discussing in this update is one, we are seeing some pretty significant institutional ownership increases that I think are noteworthy to kind of give us a bigger picture of what the big money or so-called smart money is doing with their AMC positions, specifically in the last quarter. So everything that anybody has been saying about institutional purchases or sales that have come out recently, those purchases or sales have come out or have been executed in the fourth quarter of 2021. So I just want to make that clear to everybody. Then we are going to be getting into this situation with naked shorting. My buddy Randall Cornett actually kind of found the initial piece of this. I did a little bit more research and just kind of found how messed up this situation actually is and how deep this goes in our financial system, where these big organizations are utilizing naked shorting to essentially make themselves boatloads of money and not really live up to their obligations in some of these financial transactions that they're getting into, but more on that in a little bit. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So when we're coming over to the Ortex data right here, we have utilization 100%, somewhat 100%. It's not really confirmed that it's 100% yet. We've seen contradicting data from S3 partners and from Ortex, so we're gonna have to give this about another week or so to really figure out if this cost to borrow is going to increase to really confirm that 100% utilization and the increase in that cost to borrow. But right now we're sitting at about what we see here as 21.13% estimated short interest with 108 million shares sold short. That is a very, very significant amount. Now, when we come over to this website over here, we see AMC Entertainment expiration date next week. We do see the max pain, which is the price that the most amount of options, calls, and puts expire out of the money, meaning they are worthless on expiration. So that is going to happen at that $19 price point. So that benefits market makers, institutions that are selling these options to, most of the time, retail investors who want to gamble on those weekly expiration dates. So be very careful with what you're doing with any of your options trades, specifically on AMC. We've seen it many, many times in the past. These options expire worthless, but make sure you're considering what effect that the options that you are buying are having on the underlying share price in terms of buying at the money and in the money contracts, the effects of those versus those deeper out of the money contracts. Now, let's talk a little bit about these institutions. So when we come over to Fintel over here, we see that California Public Employees Retirement System looks like they increased their position. We see this filed 13F over here. So the California Public Employees Retirement System increased their position by about 432%, all the way up to 619,000 shares. And then we saw the California State Teachers Retirement System increase their position by about 31.89%. Both pretty significant increases, which is a solid thing to see. Now, when we come over here a little bit, we saw Goldman Sachs significantly increase their put position, but they also increased their share position by a significant amount too. Now, when you think about an institution that's buying shares and puts, when you really think about what options are, they're insurance on a position. That's what they're supposed to be used for. Now, I know a lot of us really like to try and make money with options. That's not necessarily the actual purpose of them. If you are buying put contracts against a share position, you're essentially creating your own price floor, and it's just insuring your position. So that's most likely what Goldman Sachs is doing here. Now, I know everybody is going to say, well, these institutions are buying, they're just buying to loan out the shares. With low cost to borrow that we've been seeing on AMC for the last couple of months, it doesn't make a whole lot of sense. Could it be happening? Yes, it obviously is. But these institutions have a lot more to gain on the stock price going up than just buying the shares to loan them out. So I want to make that clear to everybody. Now, let's get into this naked shorting situation. So first, shout out to Randall Cornett. He did post this video about 10 hours ago. Did Morgan Stanley just admit they naked short? If you guys do want to see his explanation of this, make sure you go check out that video as well. But first, we need to get a couple of definitions out of the way in order to really understand what is going on here. So what is a callable bond? This is going to have to do a little bit with the bond market. So a callable bond, also known as a redeemable bond, is a bond that the issuer may redeem before it reaches the stated maturity date. A callable bond allows the issuing company to pay off their debt early. That's essentially what this is. It's a benefit to the issuer of a bond. So it's the person who is collecting the loan, essentially the money in this transaction. Now, let's get into this situation with Morgan Stanley and kind of potentially what they may have been doing. So when we come over to this page right here, Morgan Stanley Structured Investments, auto-callable yield notes. So auto-callable yield notes provide investors the opportunity to earn, key point here, contingent interest, meaning it's going to depend on something. What does it depend on? Well, at an above market rate, that's what the interest rate's going to be, if the underlying asset closes at or above a specific threshold level on periodic observation dates. Now, there's been a lot of talk in the past on the cyclical nature of these price movements to the upside, but that's not really what we're trying to get into in this video, but this definitely could play an effect into that. So the notes may potentially be redeemed on an observation date and otherwise may offer contingent downside protection when the notes are held to maturity. But let's take a look at how the payout actually works with these notes. So hypothetical scenarios on observation dates. Scenario description, underlying stock, so any stock, is above coupon, both coupon barrier and call hurdle. Coupon is paid, no early redeemed. Underlying is above coupon, but below the call hurdle. The coupon is paid, but the note is not early redeemed. Now it's under both, no coupon paid, not early redeemed. Then when we come down here at maturity, the underlying is above both coupon and principal barrier. The coupon's paid, the note is redeemed for par. So whatever that value, the initial value of that bond is supposed to be, is what it will be redeemed for. The underlying is below the coupon threshold and above the principal barrier, no coupon paid, note redeemed for par, but it's when it's below both, no coupon paid, 1-for-1 loss of principal. So that benefits the issuer of the bond. Now, when we come over to this right here, this is an example of one of these auto-callable contingent yield notes. Now, when we come over and type in these specific words, naked, when we come down here a little bit, in order to facilitate the offering of the securities, this is what Randall found. The agent may engage in transactions that stabilize, maintain, or otherwise affect the price of the securities. Specifically, the agent may sell more securities than it is obligated to purchase in connection with the offering, creating a naked short position in these securities for its own account. The agent must close out any naked short position by purchasing the securities in the open market. If they want to do that, a naked short position is more likely to be created if the agent is concerned there may be downward pressure on the price of the securities in the market after pricing that could adversely affect investors who purchase in the offering. So what does this sound like here? Remember, these notes are contingent on the price of the underlying security, but it's saying right here that they're just naked shorting. So what they honestly could be doing is selling these bonds, then they're going out and naked shorting, pushing the price of those securities below the threshold level and not paying anybody. These institutions have kind of found their own infinite money glitch, and if you don't read the fine print of these offerings, if you are an investor, you're most likely getting screwed over many, many times. Now, with everything that's been coming out over the last couple of weeks with these DOJ investigations, these manipulative short-selling allegations, the Citadel members getting named, Muddy Waters, Andrew left at Citron, Melvin Capital having issues, you can't call us conspiracy theorists anymore. It's impossible. We've been talking about this for over a year at this point, and almost everything that we have stated that has been backed up by logical fact has come true, and the apes have been right. Now, how does all of this affect our positions in AMC and GME? Because, well, this bond offering right here, is based on Micron. So it's an offering on Micron Technologies when we come up here. Link to the common stock of Micron Technology due February 23rd, 2023. Now, it's possible that another organization has done this on AMC. It's very, very possible. But the fact remains that this is a problem in our market, and most likely with the two stocks that we like to talk about all the time, AMC and GameStop, these types of naked short sales, and again, you're not supposed to be able to naked short unless you're a market maker providing liquidity, and even then, they are supposed to close out those positions right away, but it creates a massive failure to deliver position if they don't. So, everything most likely is going to take an extended period of time to play out. I've been saying this for a very, very long time. And we also know that just randomly, these stocks can go absolutely nuclear and start on their run. Now, you have to ask yourself a couple of questions. Are you willing to wait for these situations to really play out in our favor and have and have that patience that we really need to see in the market? There's a quote from Warren Buffett: the market is a mechanism for moving money from the impatient to the patient. So in my mind right here, when we're using 1348 to make money on the side and just kind of be able to withstand the volatile price movements in the stocks that we like, I'm perfectly fine with waiting until these situations play out. We have more time to gather evidence like this. It is perfectly fine that we are waiting and seeing the manipulation that happens every single day to kind of just give the DOJ and some of these other institutions more evidence to really come after these people after we see that price movement to the upside. And again, when you look at the short interest in these stocks, the shorts have not closed out or covered, however you want to call it, in any meaningful way. And although the stock price right now of AMC and GME are at much lower levels than we would like them to be, with all the positive catalysts coming up, I think we are in a really, really solid spot. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.